link in the, I'll post the link in the VIP room so that people can always watch a replay, as it were. Right here. Okay, so let's put on the camera. I mean, this will be, we're going to look for other pairs as well, so that we don't stay just here. We're going to look for other pairs quickly, and then we'll come back for more explanation, if anything. Where is my camera? Okay. Okay, so for those trading prop account, for those trading prop accounts, let me also explain something. It's important you know this. Let me also explain something. Just 1 minute, guys. Just 1 minute. Just 1 minute. You know, so Jacob asked the question a while ago. I would seek to answer that again, you know, because I know some of you just came in. You know, but just to first of all say, if you are trading a prop account, you know, say you go for the $15,000 account, you know, they give you a maximum drawdown of 1,500, which is 10%. I mean, most of them will give you a maximum drawdown of 10%, which means if you lose 10%, you know, you've lost that account. So if you were to go for a $15,000 account, your 10% will come to 1,005. The way to actually work out or do the math, you know, so you don't blow your account, is to use a lot size that matches that drawdown. So even though you have a $15,000 account, trade as though you have a $1,500 account. You know, because if you are going to be using a lot size of, you know, that kind of like matches that 15,000, it's going to be way more. It's going to be way more. That's why, for instance, here you see me, you know, starting with 0.1, you know, for individual trades. You know, I mean, because I'm working with 10% of the amount I've been given. If the company says, you know, what you really, your drawdown should be 10%, which is 1,500 of that amount, that is in a nutshell, that is basically what they've given you to trade. You know, so just to be aware of that. Okay, so coming back to the question that Jacob asked. Coming back to the question that Jacob asked, which is a very important question, which is a very good question. You know, I mean, I am looking at it. I will try to explain that using our regular indicator, which is the moving average. I would also explain it using price action. What question Jacob asked was, since we entered the price here, the trade here, I mean, this is a new candle now on the 15-minute, but we entered when it was still here or here. By then, it had not broken this high, the previous high. Let's go there. If we zoom out, we see that the previous high is confirmed by this and that. Price had not broken, but we entered anyhow. And he was asking, why did we not wait for the previous high to be broken? You know, and I was thinking to explain to him it's because of the momentum. The momentum is to the upside. One of the things that, one of the strategies that price action traders would use is, what you call an ascending or descending triangle. This is an ascending triangle. So for those who think I don't look at price, I don't do price action, eat your heart out. I know you guys here, I trade price action and indicators. But just those who would see this video and think, oh, indicators all the time. Price action, requires that, yes, you should break this high, but it also means that if there is momentum and you anticipate the high is going to be broken anyway, you enter. I've drawn this trend line. You don't see trend line on my chart most of the time, but I drew it when, Jacob asked the question, and in explaining, I pulled out the trend line. So you can see the price has been going up. It went up there, came here, up, came here, up. So even if it does come back down, it most likely would hit this trend line and continue up. That's not to say it will not break it. It could break it to the downside, but it's just one of those, strategies that you need to be aware of. So that being said, if you were also to consider in the indicators, you will see that, the price, at least as of here, as of when we entered, was above all three indicators that we use, our indicators of choice, our moving averages of choice. The price is all above all three of them. Now, I've always said, if you are buying, you want to have the yellow on top of the blue, on top of the red. Ideally, that's what you should do. That would not always be the case, because sometimes it will be the case that the red is above, but the momentum shows that it's going to be taken out. Price is going to take out the red. It will be good to do some back testing on that one, guys. It will be good to do some back testing on that. Well, for you, I mean, I have proven it, so I know that sometimes, the red would serve as some kind of resistance, but it also gets broken as well. When the momentum is powerfully moving in the direction of the red, you can be sure that the red is going to be broken. If the momentum was not there, then it might act as some resistance, which means the price could come here and bounce off it. But because the momentum is high, you're saying it's going to break it. Now, just to also confirm this being an ascending triangle, let me also draw it out. It seems like we're going to hit our TP1. As a matter of fact, in my other account, I have hit my TP1 already because I placed 2 trades. I entered 2 trades on the other 2 positions. Anyway, let's stick with this one first. Okay, so why is this, or how is this an ascending triangle? We know what a triangle looks like. A triangle looks like this. Okay, so I'm glad I'm teaching and recording this today anyway. So I'll do more of these sessions. A triangle looks like that. You can flip this triangle in any which way you want. A triangle is a triangle. A triangle, an ascending triangle, would look like this. So you can see it is still a triangle, but it's just been placed differently. It's been rotated. So that's what we are seeing here. We see this part of it. Oop. So we see that part of it. You can see this shape is what we're looking at here. The price is gradually pushing up higher and higher and higher and higher. It has broken, it has now broken the top part of, well, it has now broken that resistance, which is this side of the triangle. For those who can remember, the different types of triangles, maybe you can remind us. I'm not quite sure this is an isosceles triangle or whatever it is, but this side, that side has been broken. Anyway, let me not dwell too much on that because we need to find other trades. We'll do more teaching. However,
I think that's a scaling, scaling triangle.
Okay, we could check it out later on. Okay, so basically we see now that it has been broken because there was momentum. How do we usually know momentum if you are considering moving averages? The smaller moving average has to be above the bigger moving average, and that's what we have here. And it so happened that the smaller moving average is pointing up. Momentum is written all over it. So I knew or suspected it was going to break it. Okay, so let's leave that quickly and let's begin to adjust things. Maybe I'll begin to take profit on my other account. But I believe this is going to go higher though. If you can see where I marked. So I take it you understand that, Jacob, since you were the one that asked the question. Okay. Now, if we check this, that's basically where I am targeting, at least. Let me change this color here. Okay, so we'll be targeting there as TP1, and then the next high maybe, and the next high. So I mean, the different highs, are to be noted. They are noteworthy. They are noteworthy. So the reason why somebody will say there are no profitable Forex trader in Nigeria or in any country for that matter is usually because the brokers in that country get away with murder. The brokers in the West, in the UK, in America, in Australia, they would not. I mean, we know in America, especially, brokers do get fined. When people report brokers for manipulating the trade or not paying them their money, the government takes it very seriously. Some of them are suspended. That's why you don't find a lot of brokers in America. But thank God for America, UK, and Australia, the brokers are well regulated and they can't muck about. It's only in Nigeria you make $20,000 profit and they'll decide they want to pay you $13,000. How ridiculous. Pay me my whole money. Pay me my whole. That's why, guys, I mean, I can see some of you are in Nigeria here in this live session. That's why I'm also recommending, IC Market to you, because IC Market, yes, they take traders from all over the world. Even if you're in Nigeria, at least there's a broker you can trust. I'm going to move my stop loss now. I'm going to move my stop loss. I know it's just, it's not gotten to TP1 yet. I'll move it, not necessarily to break even, but to move it higher up. I did say, as you go into profit, begin to move your stop loss higher. Begin to move your stop loss higher. So hopefully this is not a fake out. A fake out is when it breaks out of a range or breaks to a new high and then comes back into where it started. You know, I did say, guys, that there are a lot of news events this week. The news calendar is littered with red folders. Okay, so let's check other pairs. I mean, you know, let's just leave that as it is. Let's check other pairs. Let's check Euro, Aussie dollar. Euro, Aussie dollar. Okay. Euro, Aussie dollar. Let's try the daily. Just check the daily for the sake of it. Boom. Okay. Right, you. You know, I haven't put out any videos, any forex trading videos on YouTube lately. You know, so maybe I'll put this one out because I did some teaching there. I did some teaching there, which, I mean, you know, like I say, I mean, you know, your questions will bring out the best in your teacher. You know, I mean, we know what to teach, but sometimes it might not occur to us to teach it on a particular day. But that question was a good one, you know, Jacob. And I've not heard anybody explain it on YouTube. You know, YouTubers, you know, would basically put out just a little for you to draw you in. They won't put out the meat of the meat. I was going to say the meat of the word. They won't put out the meat of the word. You know, but that was a good one. So I think I'll post this one on YouTube for people to learn some stuff as well. And also for the naysayers who say indicators do not work. Right here. So this one, let's take out our indicator. You know what? I'm going to pause this for a minute. I'm going to pause that for a minute. Okay. This is the 1 hour. You know, I don't know how I missed this trade yesterday. After this long drop overnight, you know, yesterday morning, we were stuck in this range. You know, because I was busy with other things, I could have just come and marked this out. I could have marked this out knowing fully well that at some point it was going to break above. I could have captured all this, but that's fine. We don't cry over spilled milk. Okay, so it seems like our pair is still pushing up. Right here, we'll come back to this one. We'll come back to this one. What other pair can we look at, guys? I know Yemisi is loving pound card, except that we're in a pound trade already. Now this broker doesn't have gold or indices. What a shame. What a shame. So we are limited on this broker. Okay, let me do it differently. Right. Okay. Yeah, nothing else is really moving as such at the moment. Nothing else is moving. Okay. So ideally this should, push up more. Let's go to let's check the 5. So, I mean, what I have been showing, lately as well, when there's a push and there's a pause, sometimes it continues, sometimes it continues, so we see there was this push from the trend line here, a push up. There was a slight pause there, another pause here, each time it pushed up. So let's just take it that this is a pause as well, and that is not going to come and retest the high. You know what, let's mark up this high so we have it, we can see it visually. So we know where we don't want the price to get to. We don't want the price to get back there. Euro. Not too keen on this Euro AUD. Euro AUD. So, I mean, going with the same thing we talked about a while ago. Okay, except that this is 5 minutes. Okay, let's go to 15. Because you could say, okay, fine, where the price is now is also close to a previous high or pivot. Let's use let's mark it out this way instead. You could say it's also close to a previous high. Let's stick our 200 there and see. Okay. Yeah, I mean, this for me is somewhat different, because let's make it bigger. Let's make it bigger. Okay, so this for me is probably too close to the recent high. I mean, if it was like here, I mean, so basically talking about recent highs and lows being broken, you also have to consider some things. If it was here, I would take it because I have, I have some room for it to move. If it was bang on here, like the trade we entered, that was more or less like here. It was very close to the high. It had not quite broken it, but it was very close to it. But this one is slightly lower. It's going to require a bit more energy to push through it. Whereas if it was slightly higher, I know, okay, fine, it's just going to be one push, the push of one candle. As opposed to here, it might require like two candle pushes, you know, to break through the resistance. So on this occasion, I would not take this one, even though the momentum is still to the high, still to the upside. Also consider, you know, it's come from here. The price has come from a pretty long way. And once it made this one big push, second big push, average size push, it began to just, you know, creep. It began to creep, you know. So I'll turn off my camera now, guys, for some minutes. It began to basically just, you know, creep up, you know, or crawl, which obviously indicates that the power, you know, the momentum is being lost. So because of that, being close to the high, I would not necessarily be entering this one. Okay, so I mean, I would leave my stop loss here. I will leave my stop loss where it is. You know, to give the market room to move. I'll leave my stop loss here. I mean, we did about 13 pips or so. I know some of you, you know, could have taken your profit, but that's I am wanting to take profit at TP1, which is like 20 pips. I mean, obviously, if you entered one-on-one position, yes, that would work, you know, work out quite well with regards to pips. Okay, I mean, in the last training session I did, I talked of using consummate traders, you know, if you wanted to plug into our copy trades, but I have since spoken to them and they say they don't allow copy trades, which is a bit sad. I mean, I know the initial video done by one of their members, one of their owners, you know, he did say copy trading allowed. He didn't specify, unless he meant that you can copy to yourself. So I could take my own trades and have a couple of accounts and copy to myself, as opposed to me copying to, you know, the students and mentees. So they say you cannot. So what I suggest is, obviously, if you still want to get the consummate trader prop account, you know, is to just, you know, join us in the morning. We all trade together. You know, join us in the morning. I mean, nobody can then say much, as it were, you know, because, you know, I mean, ideally, my team members, my students should trade the same strategy. So whether they are trading with me live or trading on their own, it should presumably be the same strategy, you know, except that we have decided to, you know, trade our accounts together. well, in that sense of the word, or trade together, not trade our accounts together, but trade together. So you could get, the consummate prop firm and join us in the mornings. So looking at this Euro AUD, it does want to go up. I like this huge wick on the daily time frame. So this would most likely push up some more. Okay, so we would obviously be wanting this to keep on going up. We want it to keep on going up. Okay, so far today, this pair has done about just over 55 pips. It usually does an average of 100 pips. So even if it gives 80 pips today, that should be fine. 90 pips would be even better. So I would not be looking to enter any other trade until this one goes into profit. Profit proper, that is. Okay, so this is an example of a previous high being broken. This is a pound card. Now this is the daily time frame. Let's move this lower. You know, this is an example of, I mean, you can see here, obviously there was not, coming from here, there was not enough momentum, enough, you know, power to break it. Hence it rejected, it tried again until it finally broke it. Again, you can see an ascending triangle. I mean, when you have an ascending triangle playing out, it would eventually break. You have an ascending triangle here. This is the side of it that is ascending. And this is the flat top, obviously. I mean, a descending triangle, you basically just do it, you draw it differently. You rotate this triangle. Guess what? Even if it didn't break out here, what could have happened is it could have then come back here, 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 and break it eventually. Okay, let me do it differently with it. Let me do it with a different color. Let's use purple. Okay. So even if it didn't break out here, sorry guys, my pen is, okay. So you could have come down here because this is the trend line, or this is this part of that triangle. And you can see the space is narrower and narrower. Here, this space was broad. As it begins to move up, you know, the triangle, as it were, begins to squeeze the price into a tight corner until it has nowhere else to go but to break out. So it could either break to the downside or to the upside. But because it is an ascending triangle, it most likely will break to the upside. That's if it didn't break here. So that's basically how to trade ascending triangles. Okay. Sorry guys, I've just moved my stop loss back down, back lower. We need to give this, trade room to move. The momentum is, clearly to the upside. I want it to be that we don't lose it unnecessarily. This is the 30-minute time frame. You see, that's the difference between, trading on your phone and trading on the PC. Now on the PC, you can just click and drag your stop loss and take profit points. Whereas on the phone, since you can't do that, you have to type it out each time. So if you enter one TP or stop loss and you need to change it, you have to, manually type it out. But that's how a number of traders, trade in developing nations. Traders in developing nations obviously mainly use their phone. Although one of us here, one of us here uses his phone a lot. If that's what you are comfortable with, that's fine.
Just wanted to say I live in an advanced country.
Absolutely.
And
Absolutely.
I'm just more used to the phone.
Yeah.
Very easy to me. Then I'm always on the move.
I'm amazed how you're able to handle it. I mean, I see you just quickly going into wow. It's a skill all by itself. It appears GJ wants to continue going down. We'll keep an eye on it as well. Okay, so this pound card pushing up as well. Except that if we look at it on a higher time frame, it is close to the high. And for me, I don't know how much power it's going to have to be able to break through. So I won't take that one either. So it's a skill as well to note when to get in and when not to get in. if it's coming to a key area. So definitely this is the one we are with. This is the one we are with today. Let's take this off. As a matter of fact, let's change these colors. Come on, push up, push up, push up, push up, push up. I mean, the good thing is, you know, where it is now, if you look left, you see there are clean candles. Let's see if we can use, yeah, let's use this one. Let's use this one. You know what, let me pull up a new one and then pull up a new one entirely. Okay, so I mean, if we look, if we check where we are, if we check where we are here on this 30-minute time frame, even if we're to look to the 5-minute time frame, how about the 1 hour? Yeah, I mean, right from the 15-minute time frame, the 30 and the 1 hour, if we consider where we are and we look left, we see there are clean candles, you know, clean as in solid candles, you know, as opposed to them having wicks. As opposed to them having wicks. That's usually means clean traffic. You know, wicks usually speak of rejection. It means the price was rejected at some area, but you can't quite see the wicks, the wicks here because the candles, I mean, there is, making this bigger, you can see there is a wick here, but this candle, you know, makes up for that. That's one of the reasons why I would have confidence to also leave this trade and not, you know, come out early. That's why I moved the stop loss, because you know there's momentum. You just basically have to give the market room to move. Okay, so what I'm going to do is I'm going to stop the recording. We'll carry on anyway. We'll stop the recording and so that whoever is watching the live replay at least got most of the teachings, all of the teachings during this session. And we don't need to keep them bored. Let's go here. So anyhow, that's going to be TP1, TP2, TP3. You know, that would mean like 50 pips for the day. It would be good if we get that. There is news later on. Let me just quickly go there. There is news later on. Hopefully, we will get our trades, our profits before it's time for news. Let me share this. So that's the news calendar. You know, that's today's date, the 3rd. There is an ADP, non-farm employment change. Now, this is like a, if you like, a mini ADP, a mini AFP. You know, we have AFP, sorry, not AFP, NFP. What am I thinking? We have NFP on Friday, non-farm payrolls, which is the biggest, news event in the calendar, Forex calendar. But usually on Wednesdays before that Friday, which is the first Wednesday of the month and the first Friday of the month, on the Wednesday of it, which is today, you will have the ADP, come out with their own estimation of what the NFP is going to be. So this tends to move the market slightly. I mean, because it's not the real thing, you wouldn't expect it to move the market like the proper NFP. But then you have other US related news events as well. Then you have FOMC at 7, followed by the federal funds rate, which is similar to our interest rate news in the UK, when they decide whether they are raising the interest rate or not. So that's basically what's going to be happening here. Whenever the US have theirs, it's usually a couple of days before we have our own here in the UK. Let me see if it's here. Let's see if it's there. Oops. Let's see. Okay. Maybe next week, so we don't spend too much time. But the news, the interest rate is going to be taking place in the UK not too long from now, because that's what tends to happen once we get the US one out of the way. Let me share the screen again. So yeah, we are 14 pips in, which is good. Hopefully to hit my TP when I want to take some profits. So I'm going to be, stopping the recording now. We'll carry on Zoom anyhow. So for those who are watching on YouTube or watching the replay, you definitely saw our analysis of this market and the little teaching we did, and I hope you gained much from it. So if you are not part of our Telegram group, join our Telegram group. Yes, join our Telegram group and talk to me. Okay, bye now.